Hurley Investments Market View commentary for the 24th Monday of 2026. We've had Brian do it for a couple of weeks, but I am back. So I've got a lot of information for you, and I'm just, for the most part, going to be going over thoughts that have occurred over the last 3 weeks. With that said, someone did send me a quick email that just said, Kevin, is my account safe? Please read this article. Thanks. I'm going to say two things in regards to this. I do kind of laugh that the ranking Democrats are suggesting that people's 401ks are somehow not safe. Should there be stronger customer protections? Of course there should be. And obviously when Apex, a clearinghouse, gets hacked, anyone that went in through that port into Apex, it shut down Money Block, and then they had to go through like 3 weeks of governments going through to make sure no money was taken out. There are things that are in place to protect the brokerage and to protect your accounts. I made the response, and I'll just read it. My response was, since the Apex feed was hacked, MoneyBlock has been beefing up the security. When they have two-step authentication, they track IP addresses, data, sign in from computers. They are as safe as everyone else and continue to monitor how others are being hacked to prevent it. I'm convinced that they take care of protecting our accounts, and I have all my funds sitting with them right now. And when I asked them what they're doing, their comment was, well, Kevin, in God we trust, but guns are just our backup. And I kind of giggled because I'm like, well, how does that help our accounts? And I was informed by MoneyBlock that they're spending a lot of time monitoring how other, not just brokerages, but how other companies are being hacked, and they're doing obviously everything they can to prevent it. Their firewall to shut everything down to prevent money from leaving worked when Apex got hacked. And that was a third-party firewall, meaning it didn't happen to them. It didn't happen really to a company they're doing business with. It happened from a company that was doing business with a business that they were doing business with, and their protocol kicked in. So short answer, I don't know if this is a democratic, let's throw some water on the stock market in an election year. I don't know, nor could I find in this article from the New York Times, nowhere did I find real proof of something that was ongoing. I did a quick Google search and also did not find anything that was happening by way of brokerages being hacked in a different way or more common than others. In fact, the biggest areas that I see problems with are in mortgage and healthcare. Those have had the biggest. Third would be banking with credit cards. So for everyone that asked, I think we're good. I think we're good. I don't think that there's anything else that we need to worry about by way of someone getting into your account. Another comment was, well, Kevin, it could be more about someone pretending to be a client and asking an ACAT transfer to another account. Yes, in fact, you should never be giving up your banking routing number or account number to anyone. But with that said, if you're under my umbrella, no one will be being asked to, if someone's moving all their money out or a big portion of their money out, they do a check with me to validate or verify with the customer. We did have an issue a couple years ago with someone that was sending in paperwork for an account, and pretty quickly it was pretty neat. We obviously changed the password. They asked me if they're moving the money. I'm like, nope, let me check. And then it got turned over to the FBI. And to the best of my knowledge, that ended pretty quickly. So another good question. Your account should be extremely protected. That's the short and the skinny. Now, this time of the year, we are having, unfortunately, September's coming up. And really, I used to worry more about October, but the September effect is in place. And as we were looking at positions, we have Apple with a long-term, pretty good size credit short call in place. Boeing is completely collared. I feel like we're doing pretty darn good in that position. I can't think here. Disney is collared, but we're probably taking some puts off of Disney, looking to roll it up higher. Google is collared right now with an out of the money put to get us through the September effect. Meta stock is covered, but Meta, Micron, Palantir, Lulu, Nike, all of those are non-directional, meaning that we have shorts on long calls for elite bull call strategies. The only stock that's running on its own right now, I believe, is Netflix. Nvidia is protective putted for earnings. Marvel is protected putted for earnings coming up. And I think we're in pretty darn good shape. I like where we're sitting at. And we're sitting at a position where we're going to lock in some profits from both Meta and Micron. And we've done really good in protecting the stock ownership. So most likely into December, January of this year, we're going to run a little cash heavy. I hope we have somewhat of a pretty standard September effect. And what that means is, from my research, and I found this pretty interesting, September is usually down as much as 0.7 on average on a down September. 44% of the time, a September is positive. So it's not a doom and gloom type of month. It's just on average, it's down more than the other months. Does that mean that if we can't take care of this Iran effect, or if we run into some new taxation on being taxed to capital gains after the increase in inflation for the year, it can happen. And some people basically have asked, well, Kevin, what is the September effect? And it's pretty interesting because I have a great explanation of it here. September is historically a heavy month for new debt supply, pulling liquidity from equities. So that would be the first push, what the September effect is. Also, a lot of government type companies, the fiscal year ends on October 31st. So many U.S. funds close their fiscal year on October 31st. which means tax harvesting normally comes towards the end of September, first couple weeks of October, and then new money's put to work November and through December. It's not uncommon. But again, it's not like it's the end of the world. I love this chart. I'm going to go down to one more. There are other things that offset the September effect. Midterms. Midterms can easily offset that September effect. So, short answer, it's not the end of the world. It's a, how would I say it? It's something that happens that right now we're paying attention to. It's something that Brian has noticed and is making sure that Hurley Investments is aware of it now that he's in his first year with us. And again, for the most part, I've been more worried about those first 2 weeks in October. That's definitely when any tax harvesting or selling that hasn't been done occurs. And that's when I am most likely willing to put protection on a couple of weeks early, as for that middle of October, end of October into November earnings season. So, short answer, we are made aware of it. I have plenty of information in here for you. I love how this article that I found talked a little bit more about, well, does this work for crypto and what else is affected by a weak September? It's all right here. Pretty good information for you. And if I can say anything, our biggest worry will be either validated or taken care of with NVIDIA reporting here on Wednesday. A couple of you asked me about last week. Are we turning? Is this the end of AI? Should we be looking at something other than tech? A lot of people have talked about, hey, what about financials? What about healthcare? The numbers keep pointing to technology. There were 3 takeaways from last week. Last week, the market was down about 1.44. I think we were down 1.07. So we did a good job beating the market by about 1/3% on average through all accounts. But second Dow Jones straight weekly decline. We had a 3-week S&P run up till this week. And it was interesting because the main push was bonds. People have moved away from stock ownership, thinking a 5% return on bonds is the way that we should go. I don't know about you, but if you're in just for a 5% return, your risk tolerance is probably not where it needs to be for bonds or the stock market. Give me a call. We'll work on getting you into an annuity. An annuity is probably a better fit for that type of risk tolerance. But there have been some unique bond opportunities. And I'm also not saying that for some people, if you're trying to create a $300,000 tax-free income on maybe $10 million, there's definitely a place for treasuries or muni bonds to be in your portfolio. more than likely, we all are still chasing growth. A bigger concern in return to growth was signs of a slowing consumer spending. And apparently last week, this was 100% decided upon by Walmart's earnings, which is a little interesting because it's my opinion that most people will shop Walmart to save money, not necessarily to look at where people are spending their money. So I did find it a little interesting that people are looking at Walmart as the, hey, where are consumers spending their consumer discretionary money? Now it's funny because someone just typed in, isn't that the bonds are at 5%? Not most of them, but some of them are competition with the stock market with limited risk. So here's my question. Someone tell me, how much did bonds lose in 2008? You can do corporate bonds, you can do junk bonds, you can do high risk bonds, you can even do US Treasury bonds. Yeah. The bond market got halved, and treasuries went through a run where they were paying less than 0.25% on the 10-year, 0% on 2, 3, 5, and 7-year, and less than 1% on the 30-year. Not only that, their value plummeted. Well, if you hold on to it for 30 years, you get your money back. That is true. Unless they're bought back. They can call these bonds. Great year for the U.S. to restructure some of its debt in 2008. But again, please don't think that diversification was protection. You had cities and states doing IOUs. You had bonds and pension plans all went under in 2008. You had all the automotive pension plans except for Ford screwed every single person as they borrowed money from the government and closed down their pension plans and their bond payments. Please don't think that there's limited risk in bonds. Bonds in 2008 lost more than the US stock market on average. And obviously, last but not least, we have this, they call it the static US-Iran war. I like what Bessett came out and said, hey, I understand if you're going to support this dictator, that there's obviously proof that they are manipulating oil prices, that they are terrorist organizations. I think there's 14 countries in the last 10 years that have had Iran attack them and actually cause deaths. People have died from it. So obviously we are in a more volatile time period. But the neat thing is right now, option prices in the VIX are pretty tame. So you might see us do a little preemptive protection, maybe on Disney that's almost overbought. Maybe we'll run 2 sets of puts on Disney. The short answer is right now might be not a bad time to do a little preemptive downside protection while the VIX is pretty cheap. I'm going to not quite use the briefing picture. It's had some issues that I don't know how to say it. It's almost like they're running into the hype or the worry. So I'm just going to skip probably the big picture for a couple weeks here. I'm going to wait till he starts writing something that makes sense again. Little interesting commentary. I'm going to go bullish for where the markets will end this week. The reason why, if we look at the Dow Jones Industrial Average, you'll see we had 3 or 4 up days and we've pulled back. We've had that little pullback. Seems like we may have even bounced off the 50-day. I think last week or the last 2.5 weeks have been enough selling on the S&P or the indexes for the month. S&P looks a little bit different. We ran up, we flattened out, and then we started coming down. It would not surprise me if we finished the month closer to that 77.50 level. And again, all I'm looking at is it seems like we've had a sell-off of at least a couple hundred points, 3.5%. It just seems the way money flows are moving that we've had our sell-off for August, and there's no need to sell off at the end of the month. Same thing with the NASDAQ. NASDAQ's coming right down. I'm expecting it to hold the 50-day simple moving average. We have about 27 points. 2980, 953. Yeah, we've got about 27 points till we break the 50. I'm looking for a bounce, and that bounce will most likely coincide with NVIDIA and Marvel having their earnings this week. Still going to say 1.5% net gain for the S&P 500 for the month. It's just a guesstimate, but we might be a little bit higher than that. Earnings this week, entering our third and last week, I believe, of retail. Dick's, Intuit, Zoom, Abercrombie & Fitch, Kohlers, Hewlett-Packard, Salesforce, Urban, NVIDIA. Thursday, Best Buy, Burlington, Gap, Ultra, Marvel's in there twice. Dollar General, Dollar Tree. Economic reports will have a pretty big Wednesday. Tomorrow, if anything, will be status quo. Wednesday with personal income, personal spending. We have GDP, we have PCE prices, durable goods. Really, Wednesday is going to be a day pushed by NVIDIA before the market opens and economic reports. Initial claims Thursday and the Chicago PMI Michigan sentiment on Friday. A pretty, really, every day except for Wednesday, non-important, non-issue for economic reports. It will be a volatile Wednesday, most likely. How am I looking to trade? Replacing at the money puts or out of the money for September effect. We also have covered call positions for those summer doldrums that we're pushing out through September. So you may see us do a bit of rolling out and up to collect more credit, or at least out in time to collect more credit on some longer term covered calls to act as just a small buffer through September. Again, I have found a ton of articles. AI is so big it's now impossible for investors to avoid, especially when NVIDIA created another $500 billion liquidity fund to borrow from. Pretty neat that the company that's requiring all these payments is finding more ways for people to put more orders in. mark my words, you're going to see more mini AI factories that are using less than 25 megawatts of power. It seems like each server, if that's an AI server, is being bumped from 5 to 15 kilowatts to 120 to 135 kilowatts per server. Old servers are not doing what they used to do. I just enjoyed this article because it had some reference. But for decades, the golden rule of investing was simple. Put 6% of your money into stocks for strong returns and 40% into bonds for safety. But according to Torsten Sloak, chief economist at Apollo, that classic framework is officially dead. The new 60/40 is AI versus non-AI, which is really interesting because in 2020, we started over leveraging portfolios to the Magnificent Seven. Reason why? That's where these earnings are coming from. Very interesting article. AI is not becoming too big to fail. You will not see the US government bail out AI technology stocks. What they are trying to say is they are becoming so much of the S&P 500 profits that they're becoming so much of the real GDP numbers. It's going to keep moving until the supply equals the demand. There are a lot of people that are storing stuff on the cloud. There are a lot of companies that are looking for AI opportunities to broaden and lower cost bases with their business. There have been a lot of AI that has done the opposite, that they've had to reprogram and so forth. But there is an AI opportunity in businesses on everything from efficiencies to cloud service and so forth. Look for that to continue into the future until supply meets demand. And right now, there is woefully a lack of supply of AI data centers. Biggest problem with AI data centers is infrastructure. You go above 20 megawatts of power, it's 25. You go above 25 megawatts in power, huge jump up in pricing. If you're trying to do a 42,000 acre super AI data factory in Utah, like Kevin O'Leary, you'll find out to power that data center with energy is 3 times what the state consumed all last year. It's not going to happen. I believe he seriously misjudged the lack of infrastructure, power lines, water, ways to cool it down. Someone messed up on that opportunity big time. So we're still following it until it no longer happens. Very interesting article brought to me by a client. Exxon CEO just explained gas prices honestly, and it demolishes a decade of political talks. Very interesting article. And the whole reference to this one is it's not a matter of having the oil, it's the matter of refining and the refinery constraint that's out there for the amount of oil that's coming into the country. We are not building refineries, or the world is not building refineries to keep up with the oil that's being, or the crude that's being pulled out of the ground. I find it interesting because we went to fracking, but a very interesting article that does say, hey, could it be that we need to reinvest in refining now not so much in transportation or distribution of crude. Jim Craner, not maybe one of my biggest fans, but he says the market is too negative. Goes back to last week. Very interesting article. If you read all the scare tactics out there, you should be able to find some pretty good buying opportunities. Santoli, why all the fuss about bond yields is happening now? A very interesting article on why you're getting pushed to be into bonds. Again, there has been a sell-off in bonds. It's not like bonds are risk-free. As we learned in the 2008 crash, the 2000 through 2003 crash, the 97 crash, the 93, 94, the 92, 93 crash, the 90, 91 crash, bonds were toast. Even the 10-year treasury was worth next to nothing. It lost half of its value and could get called back for a lot less than what you put into it. That's the catch. So do read an expert's comments on bonds. It'll tell you something. Last articles, second last article. Wells Fargo and Citigroup have room to buy a big bank. And one of the most important regionals that was thrown in there, I highlighted in yellow, is KeyCorp. I'm shocked that KeyCorp hasn't run up farther this year. KeyCorp brings a middle market commercial business and branches stretching from the Great Lakes to the Pacific Northwest. This is your small business bank to your medium business bank. It would be an excellent grab for Citigroup or for Wells Fargo. I hope not Wells Fargo's, because Wells Fargo is run pretty piss poor. But this would be a great investment. There's a chart. There was a chart that I saw in regards to this. KeyCorp has like a $12.5 billion market cap, but has $145 billion of investments put into it. KeyCorp is a much better and quote unquote safer regional bank than Citizens and Zions, definitely. It can be argued about First Horizon. It can also be argued against Fifth and Third. Probably would be a better bank than Fifth and Third because of the market cap. So it's like ranking number 1 or number 2 out of the top regional banks that are out there. I would love to see a $35, $40 takeover on KeyCorp. That would really make the end of our year. And then last but not least, Lehman's Brothers Monet bubble is coming. Critical warning for stocks. I am playing both sides of the fence so you can see it. But I would tell you guys that, hey, you're going to have 2 articles here. One that says that the OpenAI is collapsing. The other one says and justifies the numbers. It says it's growing. 2 articles for you guys to read and enjoy. Really quickly, what questions do you guys have tonight that I can answer for you? And it looks like I may have missed a question. So let me check that really quickly. I will not make that comment, but yes, I agree. Any questions you guys have that I can answer for you tonight? Main points I'm trying to get across: AI and data centers are still running into the future. There's still huge investments in backlogs. And even at the current rate of build out, we're still not seeing parity between supply and demand until somewhere 2029, 2030. Work your numbers. I would love to see KeyBank take off or get bought out. And we are mostly protected right now for the September effect. I feel we should be in good shape if the market starts to head down the other way. Any questions you guys have that I may have missed, or any comments that you'd like to be read out to the group? Abraham, you're kind of quiet today. Dave and Mary, I kind of feel like you guys were kind of quiet today too. Nathan, anything you might have that's a quick question to the group? Or Jonathan, anything you have that you'd like to mention that I can go over? If not, guys, I'm going to get this posted so you can have a good look at what's well, so you can have a good look at the articles that I found for you. Quick question: how comfortable are you with? He's working on it. Have a good night, Abraham. How are you comfortable with recent drawdowns in accounts relative to the market drawdowns? Personally, the one that worries me the most has been that we've seen Micron drawn down so much with the positions that we have in play. But as long as Micron trades above 800, we're going to be in fine shape. Meta has drawn down. That's giving me a little bit of heartache, but we might just push that farther out in time. But Meta usually runs 20-25% in the last quarter of the year. So for me right now, I'm currently not too worried about it, but I can take a look at your accounts particularly, and see if there's something that stands out. Good to see Disney back up at 111. Good to see Apple probably bouncing off of 300, heading back up. Again, a lot's going to be said here. October, November, December. That's when you usually see technology run, and they run significantly, upwards to that 10 to 20%. I think we're positioned to enjoy a historical end of the year run up in technology quite well. Kevin, why do you say that? Well, all the advertising for Christmas, advertising for Meta, Google, Apple, all the purchases in technology, NVIDIA, Micron, Dell, Apple, Microsoft. There's so much that happens in that arena. Not so much for Amazon, not so much for Tesla. But again, Amazon Prime probably gets used, and I would say a lot of their money happens through the Christmas season. So as usual, I would expect to see technology have a good run into the end of the year, even into January. Good question. Any other questions you guys have? If not, I appreciate you guys being here today. Have a wonderful evening. I look forward to seeing you guys next week, the 31st. It'll be the last day of the month. And we'll be able to wrap up August and see where we end up at. Guys, have a good evening. Appreciate you being here tonight. Look forward to seeing you next week. And guys, take care. I'll see you then. Good night, everyone.